Welcome to SeeMore Positive, where we try to take some of the news that we are seeing today and give a little bit of positivity into the interpretations, into the approach of it. Of course, if there's bad news, we will talk about it, but we'll try to bring an understanding of how this could be, something that can turn into a good thing. We have here the economic news release from March 18th. This just came out. So the first thing that we're looking at over here is the U.S. price import increased 0.4% in February, matching January's 0.4% increase. Going through here, okay, matched it. Fuel imports rose 1.7% after a large 3.5% rise in January. So that's a good thing to see, at least, with all the news of what's going on and, tariffs and different things. This is what our government is releasing. Who knows the people that are behind this anymore? This changed. Who knows how many people in this department got fired? So we're just looking to track what they're releasing to the general public. And, we'll be making updates as things go through, because there's one way to challenge these economic releases. And there are several, between Philadelphia, they have their own economic reporting, and certain states do their own sort of investigation into what the government's saying, and there's third party watches, and we'll go through that at some point. But for the most part, let's just start off at the beginning. This is what they released. We have petroleum and natural gas each contributed to February gain, and then we have petroleum prices rising 1.7% in February. Natural gas prices rising 14%. Oof, that is an increase of 11% in January. So I believe, in February, following an increase in 11%. So it's double since January. It's almost, and correct me if I'm wrong, that means it's a 25.5% increase just for natural gas. So the index for import natural gas, not export, import. Let's go here. Non-fuel imports increased 0.3% in February, rising 0.1% in January, so 0.4% overall. And that's, main contributors will be higher non-fuel industrial supplies and consumer goods. Capital goods showed a decrease of 0.2%. Let's see what that means. Let's go over here. So point January basis. Yep. Since the drop off in May of 2004. Higher prices for non-fuel foods, beverages. Prices were unchanged after advancing 0.2%. So that's a good thing to see, that there are some offsets that we're, seeing in this data. Now, again, most of this data is going to be, if it's in February, that means it was picked up from indexes and information and reports and, required government reporting from a couple of months ago. So that doesn't mean that this is March data for March. It's March data for February. So they're always a month behind. It's kind of hard to see, but hey, how does this affect March? But you look at, all right, January was at this, March is at that. Now that kind of just gives us an indication where if February rose at 14%, January increased at 11.5%, then I guess we're looking at most likely a 14% increase in March as well. Non-fueled, all right, export prices. Let's look at that. Exports right here. So prices for the U.S. exports ticked up 0.1%. So overall, 0.4% in February, matching 0.4% in January. For import prices, export is only a 0.1% in February, but January was a 1.3% and December was only a 0.5. Agricultural exports, so our farms, American, agricultural, the prices advanced 0.8% with a 2.2% decline in January. Why they say previous decline in the previous month, but yet don't give the month is very weird. So higher prices for soybeans, meat, and corn in February more than offset lower fruit and vegetable prices. So prices for export agricultural goods increased 0.6% over the past 12 months, the largest over the year advance since February 2023. So that's a good and a bad thing, of course. If you think about it, like, hey, I'm a farmer and now I'm getting 0.6% more for my product, but that also means that people are paying 0.6% more. So now the likelihood of people getting the soybeans and the meat and the corn or buying it, the supply might be reduced. So that's an unfortunate bit of news, but we can look at what that means overall. So all export, including agricultural prices, increased 0.1% after rising 1.5 in January. So that's good news right there, is that it raised quite a bit at the beginning of the year, and now it's starting to stabilize, hopefully. It only went up just a point. This is a full, 10 points, 100 point, whatever you want to call it. This is almost 15 points. This is 1 point. So that's not a bad way. I think a lot of people look at it that way, where you can say, hey, this is 1 point, this is 15, because it gives you that scale in size where that's 1 and that's 15 points. So now you look at that and you go, oh, wow, that 1 point doesn't sound so small, actually. Because if you have a 15-point increase and a 1 point increase, 15 versus 1 is 14 points. So it's a good way to kind of look at the percentages and give it a better visualization for a lot of people when looking at this kind of data. Because when you see this 0.1%, it doesn't really say anything. It doesn't give you any good visualization, or doesn't give you the comfort in knowing, or the scarcity or fear, or whatever you want to call it, or FOMO, or FUBAR, or whatever they call a FUD. There you go. The FUD of crypto in this circumstance. So capital goods, consumer goods, and automotive vehicle prices all rose. So that's something. Finished goods right here. Everything that basically the increase was led by higher prices for household goods and gem diamonds. What in the heck? I didn't know that there was a massive increase in gem. Well, not a massive, but an increase in gem prices, and that's pretty crazy. Okay, so year-over-year trends. So measure of import and export prices by locality. Let's see what that says. So up to 2% over the past 12 months, February 24. So everything went up 20 points. Fuel imports increased 28 points. Over year, natural gas prices in particular jumped 49.9%. Just to show you can see where I'm looking, let's find this out. 49.9. Just Googling that. Boom. That is a massive increase. So people heating your house, people heating things, they're going to want to, keep an eye on those types of services. And that's what I say about spending this positively, because now that you know certain things, if you're looking at this economic data, you can say to yourself, hey, how do I track or make sure I'm doing the right thing? Let's say, if natural gas was going down but electricity was going up, I'd say, hey, shut your heat off. Put on a box heater maybe. You might be paying less for that specific type of resource, but yet getting the same results. If you're like, hey, I don't want to heat my whole house. I got a 5,000 square foot house, congratulations, you are very well off. Or if you're like, hey, I got a 1,200 square foot, a small home, then you might say, hey, the natural price increase isn't going to negatively impact me. But if you have a 1,200 square foot home that is horribly insulated, then no, then this is a bad thing. It's going up. If you were paying in 2024, you were paying, let's say, $50 a month, hypothetically. You're now paying $100 a month, I think. No, let's do the math and not be an idiot, because I am an idiot. But let's say you were at 50 and we're increasing by 50%, right? So you would technically do 0.5, yeah. So it'd be 25, not 50. I doubled that. But you're still paying $75 a month instead of $50. It's a big increase when you do the actual math in front of your face, and not think bad math because you're horrible at math. And all right, the calendar was on the screen. I just want to make sure. Double checking all that stuff. So that's what we say about bringing some positivity to it, where again, this is a negative thing. It sucks for us as people. But at the same time, now that we know that gas prices have risen, we can then do something about it. And that's the mentality of being like, hey, let's, we got to play the game of spending as little money as possible and saving as much money as possible. So let's figure out how to do that together. All right, fuel. February's 1.7 increase was driven by both petroleum and natural gas. Non-fuel industry supplies, we have here, jumped 1.8% in February and 8% over the year. So now we want to look at that. So it jumped from February to February. Okay, so that is the largest over the year increase since the index rose to 8.4% for the year end of August 2022. Finished goods. Let's see. Finished goods. So capital goods, consumer goods are up 0.4%, so the largest 1 month increase since January. So if you look at this, let's see, food, beer, right here, unchanged in February after advancing 0.2%, so 2 points, and 30 points in December. Sheesh. Higher input prices for meat, cocoa beans, and green coffee offset lower prices for fruits and vegetables. So, that's a good thing. Eat your fruits and vegetables. You might want to cut back on meat for a little bit. And again, when they say meat, what do they mean? Chicken, pork, beef? Like what? Is it just all meat? I'm assuming it's all meat in that category. So it has to be all poultry, pork, everything else. If what this exactly includes, especially in the economic release where they're getting their data from, you can see right here they have their indexes by harmonized system, by locality of origin. So there's a lot of information, and then you can see the entire HTML report in here. So if you want to do, and again, this shows you the footnotes of the relative information of where they're getting that information from, especially outside of America. And hey, you always got to understand that anything you read on the internet, written by any human being, will have some semblance of bias. Now, of course, we're expecting this to be a government entity to be as unbiased as possible, but as you can imagine, China, Russia, America, Canada, Mexico, they want to report the best information that they can, but also don't want to scare people at the same time. But they're not supposed to. This is supposed to just be raw data. That's it. Take it for what we see it as, and that's all it is. So this should be as upfront and honest as physically possible. However, we see in some indications of some economic releases throughout every president. No president is immune from this, where they report, hey, I took 135,000 jobs and increased it, 225,000 jobs. But then you look at some other reports and they're like, oh, actually, no, they didn't raise that many jobs. There was a calculation error because they furloughed 600,000 people and brought 225,000 back. So you didn't increase the job market because you technically decreased it and then increased it the next month. So it's data that makes you look good, but not the full truth of why that data increase is there. So you can skew data however you want. I'm not saying that this is incorrect or infactual in any way, shape, or form. I'm just saying be curious, be understanding, and always look at it from the perspective of, okay, someone's telling me something that they want me to believe. Well, can I look at other indications that they might be skewing some of this data? Not lying, but telling a different story than what we're actually seeing. And again, that's we're in that kind of phase in this reality where that's something that everybody's getting more comfortable with, maybe. I don't know, you tell me. So finished goods, we're at there. So prices changed by category. Another good thing that I want to look at here is prices changed by category. Agricultural increased by 0.8%. So we talked about that earlier. Non-agricultural industry supplies unchanged after 2 solid gains, so 34 points and 10 points in December, so quite a bit. So it's still up 33 points, so 3.3% year over year. I'm saying 33 points because 3.3, you have tens, and 0.3 is the tens column, so this is 20th of a point, how the decimal reads. So you want to look at this as 2 points, 3 points, 1 point. And then if something was to say, let's say right here, let's look at this. So terms of trade index, actually, let's get to that in a second, but I think you understand what I'm saying. If you don't, post down in the comments and I can explain and we can talk about it as well. I'll be live, as you can see, every Tuesday, Wednesday, and Thursday, doing stuff like this and playing a little bit of WoW here and there, so come check us out. Import and export services, so this is important for us. This is a lot of the stuff that we've been looking at. So at this time, terms of trade, country's terms of trade index captures the purchasing power of its exports relative to its imports. U.S. terms of trade with China fell 0.6, so 6 points, following a 5-point increase in January. So it looks like in January they were flooding our importing area. China's bringing in as much, or we're bringing as much as we can into China and going from there. So now, as of right now, trade with Japan, because of all these tariffs or everything, we can assume or indicate that now we are getting more trade with Japan because we're getting favorable pricing, and they're getting favorable pricing from us. So we have a 1.1 increase and a 3.7, so a 37-point increase over the past year. Surprisingly, let's see, where does Canada fall on this? So let's just do a quick find Canada. Okay, so here's where Canada hits in all of it. So we have right here, prices for imports from Japan decreased from 1% over the past 12 months. So it decreased 1 point, but that's actually a little higher what we've traded with them from what I'm looking at. So import prices from Canada rose 8 points in February after advancing 16 points, so it doubled in size, went from 8 to 16. That's good to see. Over the previous month, prices for imports from the European Union increased 7 points in February, and import prices from Mexico increased 2 points. Okay, exports of locality of destination. So we're looking here, services. Let's go through all this in terms of trade indexes. Okay, so that's where that was. So, okay, in terms of trade indexes, this is where that said here. So the overall trade, so this was different. This was imports by locality. This is imports by a specific destination, which I don't know what the difference are. Measure of imports and exports by locality. So we have locality of origin. And then we have locality of destination. So that's something we might want to look into at some point as we read through all these. But yeah, we're going through that right now in terms of trade. So we have the index for U.S. terms of trade with Japan rose 37 points. That's what we were talking about earlier. And the U.S. trade with Canada advanced 13 points in February after a decline of 5 points in January and 5 points in January and 7 points in December. Oof. So now it's coming back, but it's going down. It's gone down tremendously. 7, 8, 9, 10, 11, 12. So it's actually basically even to where we were back in November. The index for U.S. trade with Mexico increased 8 points, and U.S. terms of trade with the European Union fell 13 points over the same period. So it's weird to see that in February, even though there's all this tariff trading going back and forth, there's still stuff coming through. You can't stop it, especially with a lot of these logistics things. They put forward months in advance of saying, hey, we're going to trade all this stuff. So even though a president might tariff certain things or do stuff, they're not affecting things again until April anyway. So that's they've done a lot of this stuff where I think it's not posturing, but it is peacocking on both sides to be like, we're importing you, you're importing that. And then you see that in the news, it makes you angry. You stop buying certain things. But at the moment right now, our trading, the actual objects coming in and out in February, we'll have to see where the data is in March. Import-export services, so import air passenger fares. Import air passengers. What the heck is that? Okay, so that is plain stuff. Okay, that makes sense. So it rose 3.4, sorry. So 34 points in February after a 128 point decrease. That is a massive drop off. Higher European Latin air passenger fares in February more than offset the lower Asian import air passenger fares. Okay, so that's something that we have to keep an eye on, is right here. We have this massive decrease with our air passenger fares. However, they're rising in certain areas and decreasing in others. So the index for import passenger fares increased 30 points. For the year end in February, prices for air freight declined 113 points in February, following a 37 point drop. Lower Asian freight prices more than offset higher prices for European and air freight. Despite the recent declines, import air freight prices rose 6.6%, so 66 points in the past year. So it's averaging out. It's not good. It's going up, which, it's here. We want it to come back down here. But everything's staying to where it was or exceeding to where it was in 2020. COVID, of course, caused all of this stuff to increase, whether it's corporate greed, inflation, whatever you want to attribute it to. It's a mixture of all of it. Okay, so what we're going to do here, this is the end. Now I'm going to give you my thoughts on this. Of course, key takeaways is both imports and exports continued rising in February through a more modest rate than in January. Strength came from natural gas and non-fuel industry supplies on the import side, while agricultural and non-agricultural exports both posted small gains. Again, it's small. They're doing okay, but again, higher prices may not lead to more sales. We're not looking at the sales of these. We're looking at the cost of goods, the cost of imports, how much they're rising and falling throughout the year. And in 2024, here's what we have, and in January of 2025, here's what we have. Here's the comparison from year over year as well. So this is all just imports and exports, all of it. Agricultural, non-agricultural, so tech, pencils, everything that's not coffee, beans, all that stuff. This is the index right here. Percent change in import to export indexes, selected categories. So that's something that you want to look at. So year over year prices point to a moderate inflationary environment, or again, corporate greed environment, whatever you want to attribute it to, it's up to you. But the way that the BLS would state this data is that inflationary environments for trade goods most evident in non-fuel supplies and several non-agricultural categories. Service indexes such as air freight and air passenger fares remain very volatile, I would say. Because if we're looking at what's gone up and gone down, export fell 1%, but after a 5.3% increase, so it went 17 points to 53 points. It's all over the place. So if you're looking at buying stuff from other countries, or starting a drop shipping company, it might, and again, I guess if you're watching the news, you know this, but right now is not the time, even if you're from another country. So if you live in an American citizen that lives in Puerto Rico, you're not getting that big of a deal that you were normally getting, buying from other countries and then having it shipped out to Puerto Rico. Even though that would be interesting to do a little bit of a deep dive on that. But that was today's economic report. Thank you for checking out SeeMore Positive. We're trying to just give a positive spin into the news, looking at raw data and how it applies. Thank you so much for your time. Have a great day.